Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 27th of August and I'm Brian Fernandez with my co-host Samantha Voon. And let's start by taking a look at the summary of market action. Sam, over to you.
Thank you, Brian. Now I'm just going to take us through the overall look first and then go into the specifics. Now, overall, most Asian stocks lead, especially in the tech-heavy markets, as investors anxiously await NVIDIA's earnings report. Over in Australia, shares also took a hit, reacting to higher than expected inflation data. Now, ongoing concerns about China continue to weigh on market sentiment, particularly after Canada announced new trade tariffs targeting China. Over in the US, Wall Street provided some mixed signals, with the Dow Jones and S&P 500 climbing it to its new highs. However, the tech-heavy Nasdaq Composite lagged as investors grow cautious ahead of NVIDIA's earnings report. Now, to add to that, the prospect of interest rate cuts further encouraged a shift from tech stocks to economically sensitive sectors. Now, zooming into tech stocks, tech-driven markets across Asia saw declines. We have the South Korean Kospi down 0.33%, the Japan Nikkei down 0.14%, and the Hong Kong Hang Seng dipped 0.97%. Now, investors are keen to see if NVIDIA's report continues to ride the AI wave. Now, do bear in mind that it has propelled its stock nearly 160% this year. Now, NVIDIA's performance is widely seen as the barometer of the AI sector, and its earnings report is expected to influence Asian tech stocks. Now, stocks with direct links to NVIDIA showed mixed results, with Taiwan CSMC remained steady in Taipei, while Japan's Advantis Corp, a company specializing in semiconductor testing, surged nearly 3%. Meanwhile, South Korean SK Hynix, a key NVIDIA supplier, inched down 0.1%. And in China, Semiconductor Manufacturing International Corp, a local rival to NVIDIA, plummeted over 13%. Now, Brian, over to you for the rest of the updates.
Thanks, Sam. Now we start with Australia. The ASX 200 dropped quite a bit, dipping 0.34%. Now it's July. Consumer price index came in hotter than anticipated. Headline inflation climbed to 3.5%, slightly above predictions and well beyond the Reserve Bank of Australia's target range of 2 to 3%. Now, this has sparked fears that sticky inflation could push the RBA towards another rate hike. Now, this is, however, drilling down into the numbers a little bit more, core inflation has eased, although it still remains relatively high. Now, over in China, Chinese stocks didn't fare a lot better, with the Shanghai Composite dropping 0.42%. Market sentiments took a hit after Canada imposed hefty tariffs on China's EV sector, following the US and EU, who have already enacted similar measures earlier this year. Now, the economic impact of these tariffs are likely to be negative. But the bigger concern for investors is really the potential for a renewed trade war between China and the West. Now, several major Chinese companies are also set to release their earnings, including EV giants BYD and Li Auto. Now, this could also further impact market movements. And that's it for today's market updates. Now, to give us insights into markets, we have our guest today, Liang. He's the investment strategist at the Chief Investment Office at Standard Chartered Bank. Zhong Liang, welcome to the show.
Hi, Brian. Hi, Samantha. Glad to be back here.
Zhong Liang, great to have you on. Now, Jerome Powell has signaled a looming start to a rate-cutting cycle in his Jackson Hole speech. That has been talked to death over the last few days. But let's drill down a little bit and look beside the macro elements. What are the other things that you are watching out for in markets?
Yeah, I think early on, Samantha have touched on the NVIDIA earnings. That is definitely a near-term hurdle for the equity markets, especially in the US equity markets. And the reason being that the AI team remains quite key for the US equity markets, and especially right after your the Magnificent Seven earnings of late, right? They hasn't been very inspiring. So really, the market participants are watching towards Nvidia earnings, right, and not just the Q2 numbers, but also the forward guidance as well, because they are trying to get a sensing of what is the current state of AI demand. For now side, right, I do know that the positioning, right, within the semiconductor sectors, they look a little bit stretched at the moment. So any sort of downside surprise for Nvidia earnings, that could potentially lead to an unwind of positioning, and that could be a sort of second order effect on the US equity market as well.
So, Liang, not just that, we also have the elections that affects like equities, right? So Kamala Harris has risen substantially in recent polls. How do you see this affecting the outlook for U.S. equities?
Yeah, I think it's a very topical question, right? Given that we have been focusing a lot on Trump in the past 1 to 2 months of late, I think with the ascent of Kamala Harris in the poll, I think it is good to just take a look at what Kamala Harris presidency would mean for the markets. And in our view, that would likely mean a policy continuity, right? And the impact on the equity markets would likely be neutral in the short to medium term, especially if the final result in a divided Congress, right? So Kamala do take the presidency, but also we get a divided Congress as well. And from policy standpoint, what that would mean is tax rate would likely rise, especially when some of the recent provisions under the Tax Cuts and Job Acts, those expires, you could see a climb in tax rates. But of course, on the flip side, with a sort of a divided Congress, you could get some policy gridlocks in the Congress as well. We are not going to get the tariff that we might see under a Trump presidency. So net, I think markets would see this to be these two impacts offset each other, and it's likely going to be neutral for the markets in the short to medium term.
So, Zhong, I also want to turn over to China for a bit, turn our focus over to China for a bit. So, the 2024 Q2 corporate earnings, has it lived up to consensus? And do you see any opportunities within the market?
Yeah, another timely question. I think the markets are probably still focusing on Pinduoduo, right? I think that led to a slump, right, in stock price, and not just Pinduoduo itself, but some of the other e-commerce stocks have fallen in tandem as well. I think a couple of takeaways from me, right? Maybe I'll just quickly summarize a few takeaways from the Pinduoduo earnings. One is that the domestic consumption that still remains rather weak. And two is that outside of China, we do still see quite a bit of uncertainty. And third is that competition within the e-commerce sectors that is intensifying, right, over the past few quarters. But if we really take a step back, really taking a look at the bigger picture, actually earnings have been pretty good, right? So if you look at out of the almost 30% of the Chinese corporates that have reported, they've in aggregate reported about 8% positive surprise earnings, right? And also, if you look at the forward earnings guidance, they have revised higher, right, from 10% to 13% for 2024, right? So for us, we continue to remain neutral on Chinese equity despite sort of this positive earnings momentum that we have seen. And the main reason for that is because on the flip side, you still have a couple of key risks. The deflation remains a key risk in the Chinese economy. Also, sort of the growth outlook, right? That seems to be a little bit, on the weakening trend of late. So on balance, I think we still prefer to remain neutral on Chinese equities.
Now, Zhong, finally, before we leave, the commodity that's back on the radar for everyone, oil markets. Now, geopolitical tensions aside, what does the demand and supply outlook look like for oil, and therefore then price action moving forward?
Yeah, I think it's a very good segue from previous question. I touched on the sort of the economic picture in China that seems to be deteriorating as of late. Of course, that weigh on the whole commodity complex as well. I think as Standard Chartered, we cover mainly oil and gold, and it seems like there is contrasting fortune between oil and gold as well. Maybe we'll just touch on oil. Of course, oil, we did see a little bit of rally of late because of the tensions in the Middle East, and also not just Middle East, but also in the Europe as well, right, between Ukraine and Russia. But on the demand and supply side, demand has been looking rather weak, right? One is China, but not just China, but looking towards US. We noticed that the weekly product supply, right, which is a proxy of demand, that is also falling in the past 2 months. So I think in aggregate, demand seems to be deteriorating on the supply side as well. OPEC Plus, if they would to proceed with sort of that tapering of output cuts as they guided right previously, then we could see sort of an uptick in supply. So in aggregate, that doesn't really bode well for oil market. So I think our expectation is for oil prices to weaken marginally in the next 12 months. On gold, of course, we expect gold to continue to rally to new record high. One is Fed rate cuts expectations. That would help with gold prices, right? Because there is an inverse correlation. Of course, central bank demands, right? That is still very robust and resilient, right? As of late, the Poland and India central banks are coming in to buy, even though China demand has sort of faded away. So yeah, that's for gold. Our expectation is 2,600 in the next 12 months.
Lovely. Thank you so much, Zhong Liang, for coming on the show today.
Thank you, Brian and Samantha. Speak again.
Thanks, Zhong
So
Liang.
we've been speaking to Zhong Liang, investment strategist and chief investment officer at Standard Chartered Bank. This has been BizTech Asian Midday Market Watch. Be sure to keep informed with the latest market updates weekdays at 1 p.m. I'm Samantha Voon.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, and our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.